What's going on, everyone? In this video, I want to cover the reason why you may be losing trades without even really knowing it. So a lot of this is going to come down to what asset that you're trading. For me personally, I trade the NASDAQ 100. So I'm either trading NQ contracts, which is the E-minis, or I'm trading micros, which is MNQs. And one thing that I think a lot of traders are not realizing is that week to week, market conditions change and our strategies don't, right? We have a specific set of rules, a specific set of setups, patterns, strategies, indicators, entries, whatever you want to use. And it's almost like you're blanketing your strategy to an all-in-one. And what I mean by that is different market conditions, volatility, ATR, what time of the day your setup is presenting itself are all going to change the potential outcomes. If you're showing up at New York market open and you're sitting there at New York market close, well, the volatility in the ATR, average true range, is going to be much different off the open than it might be during lunch. So let's say, for example, you get a setup that presents itself within the first 30 minutes of the market open. That range, that take profit, that stop loss might trigger and get hit a lot faster than, let's say, trading throughout the lunch hour. Okay. And if you're not making adjustments, you might find yourself taking a lot more bigger losses that are going to trigger an emotional reaction to overtrade, FOMO, size up off the open. And you might start to see that, you know what, I do a little bit better later on in the day. Is that to say that you should not trade the open? Of course not, right? If your setup presents itself, we want to make sure that we can execute and take, proper risk to be able to be in that trade to potentially take a profit on it. But what we might need to do, let's say during the open, is instead of trading, let's say you're a one lot trader where you trade one mini contract, well, maybe we need to trade 5 micros. Maybe we need to trade 2 micros. And while you may be thinking, well, I'm not going to make that much money, you have to really understand that if your average move, if your average move is going to pay you 15, 20, 25 points on the NASDAQ, I'm just going to use a general example. And your average stop loss is 15, 20, 25 points. Well, during this time here, you might be getting stopped out of trades that would otherwise work in a window like this, just due to the volatility in the range is a lot greater than it is here. Now, these trades here might take 2 times as long, maybe 3 times as long to stop you out or pay you, versus the bright shiny star here trading at this period of time is you can make big money very, very quickly, right? But you can also lose money very, very quickly in this period of time as well. So not knowing that you should be adjusting your position size to fit the market conditions at the specific time you are trading could be a result of why you are losing more than you are making. Because let's say your average loss is $250, and let's say you're giving yourself or setting a hard rule for yourself where you're saying, if I lose 2 trades, I'm going to stop trading on the day. During the open, the range is at least 2 times, maybe 3 times as big as it is later on in the day. So if you get into a trade, let's say, you're getting into to buy this pullback here and it stops you out, right? You could potentially take a loss in this period of time that can be double the amount that you're taking on this time, just due to the fact that you're not adjusting your position size. Now, if you say, okay, well, I understand that. I know that I shouldn't be trading off the open. A lot of people like to revert back to that point. Well, I just will not take any trades in the first 15 minutes. That's not what I'm saying. You can definitely still take trades off the open. We just have to make sure we're doing one of 2 things. Either we are increasing our stop loss by double, and the only way that we're going to be able to do that is to decrease the amount of contracts that we are trading during that specific window. So in theory, we're still going to be losing if the trade doesn't work out the same amount of money that we would lose on a period like this. However, we are not going to blow our accounts up by trading the same size in this range, right? So that could be one thing that you need to work out. Again, you would have to go through your specific strategy and see, if I'm normally giving up 20 points and that strategy is winning at a 70% win rate, typically, well, what time is the highest frequency where that win rate is the highest? Is it off the open? Is it after the first hour? Is it after lunch? Is it power hour? Because what we want to do is we want to stick to putting on the most size where we can make the most amount of money in our highest win rate percentage window. And we want to decrease the size, which is decreasing your risk, in the lower probability window. Now, instead of just cutting out entirely the lower probability window, unless that specific window, let's say off the first 30 minutes of the market, you have a 0% win rate over a large sample size of, let's say, 100 trades. And yes, in that point, in that particular case, I would just completely cross out taking any trades whatsoever off the first 30 minutes. But let's say, off the first 30 minutes, you win at about a 50% win rate, when normally you win at a 70% win rate. That's okay. That just means that throughout the week, we might take a couple more losses throughout the week. But what we don't want to do is have those couple extra losses be 2 or 3 times as big as our normal loss. So in order to still be involved and in order to still be on the playing field to play the game, all we need to do is decrease our position size down by at least half and open up the stop loss. That way, those parameters keep the same total dollar amount loss the same as when you have a higher probability win rate. If that makes sense to you, definitely drop a like on this video. If you would like more information, or maybe you would like to see this be played out in real time on how to specifically manage your position sizes and adjust your take profits and stop losses based on what time of day you're trading, then definitely join Evolution Traders. This is something that we try to work on each and every single day inside of the live trading streams. I do have exercises as well where you can kind of break down on a checklist when you should be kind of maneuvering these different things around. If that interests you, you could definitely join us. We are always looking for more traders, obviously, to join the team. And I will see all of you guys on the next video. Again, make sure to like, comment, and subscribe. If you guys need any Apex evaluations, you can use code DAnthony. If you are looking for direct to sim funded, you guys can go with Top One Futures, which that link is down in the description box below. And also daytraders.com. Do not leave them out of the mix. They are introducing Project X, and they're going to be running a 90% off sale with the Project X platform, which I think is really, really good for traders with that auto lockout feature, a specific trade count setting where you can definitely, say I only want to take 3 trades today. You can definitely set that up. And after 3 trades, it's going to get your account locked out to where you can't take any more trades. This is really going to help those traders who have a very, very hard time with over trading, revenge trading, and doubling their size and stuff like that. So again, day traders is also a good option at 90% off. Use code DAnthony there as well. I will see all of you guys in the next video. And again, trade safe, my friends.